Hello and welcome to another strategy video. In today's video, I'm going to show you another very easy strategy that uses just one daily bar as a setup. And if you haven't already seen the thumbnail to this video, it wins 92% of trades. It's an idea that I got from Larry Williams. It's actually in his book, Long-Term Secrets to Short-Term Trading. But he doesn't go into too much detail with this strategy in particular. But I thought it was worth testing, so I quickly coded it using multi-charts, so programmed the strategy, and I tested it on euro dollar, and I'm happy to say it works really well. Larry's book that this strategy was in was first published in 1999, and I've actually got the second edition that was published in 2012. Now, I don't know whether this strategy was just in the second edition, but I do suspect that it was in the first edition as well, judging by the chart that he showed using the US dollar currency. But I'm going to assume this one little pattern is decades old. But I'm going to test it using euro dollar, and I'm going to test it over a 10-year period from 2010 through to 2020. Larry only details the setup, so it's just an entry setup. He doesn't talk about exits. Now, having read the book before and dealt with a lot of Larry's strategies and ideas, I chose a couple of basic ideas. One was an exit at the end of the day, so that would actually be a day trade, trades lasting less than 24 hours. And the other exit, which I'm actually going to show you today, is a first profitable close. That means we wait for the close of the market, and if we're negative, then the trade stays open. But the minute we see a profit and we see the close, then we exit. As I've mentioned, Larry shows the setup on US dollar currency. He's more of a futures trader. He doesn't trade FX or Forex like I do. I mostly trade Forex at the moment, so I thought, let's give it a go on Forex and see how that works. So I chose euro dollar. Now, I'm only just presenting the idea, and I'm going to show you the results. Now, it's up to you whether you want to go out and trade it, because these strategies can and do stop working in the future. Okay, so let's talk about the entry. So I've mentioned it's daily bars, so we're looking for the daily bar and we're looking for an outside bar. I've previously covered inside bar strategies, and this one actually uses outside bars. So an outside bar is simply a bar that's the high is greater than the high of the previous bar and the low is less than the low of the previous bar. So the range of the bar is greater than the previous bar. So Larry actually talks about this being a long only setup, so we're only looking for buy trades. However, I've sort of reversed the rules as well, and I've tested shorts, and I'm going to show you the results for those as well. But for a long trade, we're looking for an outside bar, and we're looking for the close of that outside bar to be less than the low of the previous bar. And for short trades, my idea was outside bar, but we're looking for the close to be higher than the high of the previous bar. So once we've seen this daily setup, this outside bar with a close that's lower than the previous bar, then we literally enter a buy signal at market. Now, because we're talking Forex and we're talking 24-hour markets, most of the time, unless it's going to be a Friday and then you're going to be entering the market on a Sunday evening, but most of the time we're going to see this setup, and then minutes afterwards we're going to actually take the trade, because there's not a big close session with Forex. Larry didn't state a stop loss, but I've simply used a 200 pip stop loss. It's not particularly optimized. It's just through experience of time frame and market, I know 200 pips is probably a reasonable stop loss for using on euro dollar. And the exit, as I've already mentioned, we're looking for the closing, the first profitable close. So the minute we see the close is profitable, then we just exit at market. Or we might get stopped out, or occasionally we might actually get into a new trade in the opposite direction. That doesn't happen that often. I'm going to show you the results on my computer from programming and running that back test. And then what I'm also going to look at, I'll show you long trades, short trades, but I'm also going to look at trading day of the week. It's just another idea that Larry's big on. He seems to think that, and he's right, that some trading days are better than others. So I actually included an extra bit in the programming so that I could look at how does this strategy perform on a Monday, Tuesday, Wednesday, Thursday, Friday, etc. and see which days are better for long and which days are better for short, and see by eliminating some days if we can actually make the strategy, provide better results. And by the way, if I've gone a bit too fast over the rules, I've actually written out the rules in a report. I've even shown you some of the backtest reports, shown you what works, what doesn't, and I've put it all together in a PDF document, and you can download that for free. I'll leave the link down below somewhere, so go and grab that if you want to start trading this strategy. Okay, so let's go and have a look at the results on the computer now. Okay, now we're in multi-charts. I'll just briefly show you what the setup looks like, and then we'll dive into the results. So looking on screen now, we can see each one of these blue buys is when there was a buy trade taken. So we can see, look at this bar here. This bar that I'm on now is the outside bar. If I just move off it, you can see that the high was greater than the high of the bar before, and the low was lower than the bar before. And of course it closed less than the low. So that was our setup, and then we went long there. When we closed it was negative, so we didn't exit. The next bar, look, we closed and it's positive, so we exited. And same with the rest of these trades. So I'll show you the results of this setup using a 200 pip stop loss, just long only, trading every day. There's the equity curve, which is pretty nice over a 10-year period. Total trade analysis, we can see that we've taken 88 trades. So it doesn't trade particularly often, but over that 10-year period, 88 trades, it's profitable 87.5% of the time. And the average trade, $236, which is equivalent to 23.6 pips, which is pretty decent average trade value. Let's have a look at the periodic analysis. And you see over those 10 years, we just have one losing year. If we look on average, how many trades? 9, 9, 8, 15. So average of about 8 or 9, 10 trades a year. Let's move on to the next workspace, where I did a quick optimization. And what I optimized was how would the results look if we only traded on a Monday and then only traded on a Tuesday, Wednesday, etc. throughout the week. And we can see these optimization results here. So trade day, 1 is Monday, 2, Tuesday, etc. through to 5. If we look at the net profit here, this is what we're looking for. If we look, every single day, apart from day 3, which is Wednesday, was profitable. Okay, you can see the same in the average trade. Only Wednesday was negative. So now what I've done is I've programmed it to trade every day apart from Wednesday. So cut out that trade that day that didn't produce decent results. And the results, let's look at the equity curve first. A nice equity curve, slightly better. Total trade analysis, and slightly less trades because we're cutting out those losing trades on the Wednesday. But look, here you go, we're 92.3% profitable. Okay, we had 60 trades winners, only 5 losses. And look at the average trade size, 374. That's gone up even more now. That's a really good average trade. Let's look at the annual analysis. And we've still got that lose in 2014, unfortunately, but the rest of these years are all profitable again. So in the next workspace, this shows what it's like taking just short trades every day, but just short trades. Don't forget, Larry didn't suggest to take short trades using this setup, but I thought it was definitely worth looking at. And looking at the results, equity curve looks pretty awful. So what we're looking for is an outside bar with a close that's higher than the high of the previous bar, and then we're taking the trades. But are some days better than others? So I did a check on that as well, so we can see the results. And we can see that Wednesday is fairly strong, good average trade, and possibly Friday is not bad, which is kind of opposite to what we got with the long trades. So Monday, Tuesday and Thursday are bad. So how does it look if we just trade on the Wednesday and the Friday short? Well, there you go. Not many trades, but the equity curve is up. Only 27 trades, 85% accurate, and a decent $233 average trade. So the next thing to do, next obvious thing to do, is combine the longs and the shorts. So in the next workspace, we'll look at trading long every day but Wednesday and short only on a Wednesday and a Friday. We combine the two signals and see how the equity looks. And so now we've got 92 trades, we've got those 27 short trades, 65 long trades, an average trade 370. They're actually quite close, aren't they? Look, the short trade's 362, long trade's 374. This is our £2,000 loss, which is the 200 pip stop loss. Never went above that, which is nice. So look at the equity curve, and it's even better than just the long trades, I think you'll find. So look at the annual period analysis. You've still got that lose in 2014, but much less loss than it was when we first started looking at the results. And that's about all for this video, guys. I hope you enjoyed that, and I hope you can see that the power of just a simple strategy, a simple one daily bar setup can do. But I'm not suggesting you go out and trade this just as a strategy on its own, but you start combining this strategy with other strategies. Start, trading 3, 4, 5, 6, 7 different strategies, and that combination of strategies. Have a look on my YouTube channel. There's a load of decent strategies on there, and you combine them, and that's when you really start smoothing out and getting positive annual results year after year. We saw that this had a small loss in 2014. If you're trading other strategies as well, one of those might have a really good year in 2014 that more than compensates for the little loss on this strategy. And that's what the game is all about. It's about diversification of a collection of profitable strategies across different markets. So if you liked the video and you found it useful, please give me a thumbs up, give me a like, and please subscribe to the channel. If you have any questions or comments about this strategy or any others, then leave them down below, or you can email me, Jared@thetransparenttrader. And don't forget, if you want the rules and the reports all written out in a PDF, that's below as well. That's all free. Just click the link and you can get that. So until the next video, this is Jared Goodwin, and thank you.